Seasonal tendencies are the first thing that I consider. And I usually refer to them on a weekly basis. I want to see where we're at and what I'm looking for. And you're probably like asking, why don't I show a seasonal tendency chart? Because I want you to go look at his free samples. Okay, look at a free sample, and that's what he offers. And there's a lot more that he offers, but I don't use that. I just look at his seasonal tendency over the view of the multi-year overlay. So what he'll do is he'll compare, say, 15 years of what price has done for any given market, and then he'll compare it with a longer sample set. So what I like to look for is where there are two sample sets of time where he's measured the fluctuation of price. And if there's a period throughout the calendar year where both of those measurements, and it kind of looks like two moving averages that are like moving along on this graph. And I know some of you are mad right now, like, well, I wish you would just show a chart. I don't want to do that. I want you to investigate it yourself. And it's free to go look at his samples. But I show you a lot of those in the mentorship videos. And I'm repping him then. I'm telling you, go use his resources. And because I don't get paid for it, and because I actually use it, I've actually made real money with it, lots of real money. It's not something that is a conjecture. Like I said, it's not something that is opinion. If you know that where you live and the weather patterns suggest that something may or may not happen during the weather cycle, like for instance, we're in May in this week. Coming this week, we'll be entering the month of May. When we get into the month of July, where I live in Maryland, the east coast of US, it's highly unlikely that we're going to see snow or a blizzard in July. So that's a seasonal tendency. That's a pretty strong seasonal tendency. Now, how about right now? Could it snow technically in April? It could, and it has. We've had blizzards in April in Maryland. So that would be an example of a seasonal tendency where maybe one period of time where he's measured the seasonal tendencies, it may have gone up for a few weeks. And in a longer term view of what a market has done seasonally, it may have done the opposite. I don't like to trade those. I like to find, and it's not a lot of them that occurs. So there's like this little sweet spot in the year. I look for the best period of time in the spring, and I look for the best period of time in the fall. Because what I've done is I've cherry picked the very best of the best times to trade. Because the spring season and the fall season, that's your turning points on the higher time frame, monthly and weekly and daily charts. Don't take my word for that. And it probably went right over your head, but that's the part where you're supposed to be writing down your notes. Okay? Because if you're going to be a long-term position trader or you want to have a long-term bias, those turning points, they're like the bookends. Okay? They're the parameters for the big, huge runs every single calendar year are usually boxed in by the extreme high or low of those two time periods. Okay, so my emphasis is focusing on markets that I typically trade, which is index futures, bond futures, and I moved away from Forex, but you can trade currency futures. Like if you don't want to be in Forex anymore, you can trade currency futures. And it's the same thing, but there's a slight little advantage to trading index futures because they're a little bit more liquid and they have a whole lot more smaller intraday setups. And we'll talk about that real time today, where I'll touch on not having to have a bias and how can you grind out an income, okay, without a bias. Because if I had to be asked what my opinion was of the audience listening today, or that audience that will watch this video or the series of videos that we're doing, the the common denominator would be is you're not either confident in knowing what the bias is, and what is bias. It's where you think the largest probability of movement is going to be. You're not trying to predict the closing price. You're not trying to predict the high or low of the day. That's it's distinct from what we're talking about today. You don't need to know those things. There's things to determine that, and I taught that in mentorship videos on this YouTube channel for free. You don't have to pay for it. You don't have to go to other YouTube channels that are trying to hawk my stuff and sell it. You're a fool if you buy that, okay, because it's here for free. If you can focus on the spring and fall session and anticipate directional runs that last for weeks to months. It's not always a straight shot from a spring high to a fall low, but predominantly it is. And again, that's the part where you're supposed to write that down. So what happens if you are in a market environment that's bearish? Wow, you really have a loaded deal, because in spring, what is spring? April, May, okay, April and May, there's this transition that'll send the markets lower and going down into the late summer weeks or months into September, October, and as late as the first week of November. But very rarely does it do its turning point in November. Usually you'll see the turn between the last week of August and the second week of October, and that's usually the low of the year. That's not 100% always happening, but that is how I look at the market. Every single year I go in with expecting that to unfold. And then what I do is I look at the details that the market's actually showing me day by day, intraday, week by week. How are we behaving? How are we anticipating these targets? Are they still probable? Are we still likely to trade lower with that mindset? Now, what happens when you're in a very strong bull market condition, like we've been for several years now? That means that the spring highs can tend to be quick and sudden initially, and then it can go consolidated a little bit and then slowly drift down. Or because now it's a presidential election year in the US, those spring highs down the fall lows don't tend to be as crisp or pristine in price. It's a little bit muddied, and sometimes it can be altogether rejected, and there's just a short-term drop in the spring months. And then when we get to mid-May or first week of June, we take off and we start going higher. And we don't even try to do anything going into the lower extremes for the summer months and or making a low in the fall. There will be likely a low that forms in the fall. Any environment, whether it be a bearish market or a bullish market, it's just a very strong tendency for the market to create very easy long positions, opportunities to see the market rally. It may be short-lived, but trading in September, October, and the first 2 weeks of November, being a long holder, looking for longs, that is like some of the easiest stuff you'll ever do as a trader. Like, it's like easy money, it's easy opportunity, it's easy. Everybody's stuff, if they've just filtered out how to be a buyer only during that period, chances are your probabilities will now shift in your favor if you hadn't been doing it. But the problem is everybody looks at the chart and they think trend is friend, but it's not in the end. So I like to look at those two extremes of the year. So that way we know now the highest form of determining bias, I gave it to you for the full year. How do we anticipate power 3, which is the accumulation, manipulation, distribution of price action on any given time frame? It's on every time frame. It's on second charts, 1-minute charts, 15-minute charts, all the way up to whatever time frame you want to create in TradingView. You can create your own unique, customized time frame, and that's one of the benefits of having a platform that's not one trick pony only. You can create your own time frames. If you want to look at an 18-minute chart, you can create that. It's a custom time frame that you can create. So, and we'll talk a little bit about that on Wednesday, how to go through and look inside price without the typical perspective that's usually seen. And even in my, like, the early lessons and the elementary lessons that I have on my YouTube channel, or have done in the past, where I look at specific canned or pre-selected time frames. I only did that because it's easy to teach a large group of people if we all start with the same baseline, and then we can obviously build upon that. But after looking at seasonal tendencies and looking for times when a market that I'm interested in trading has both the longer term and the intermediate term seasonal tendencies agreeing. And what does that mean? Steve Moore has the graphs that show over a calendar year the movement generalized of what the market will likely do any given time over that calendar year. I want both the long term and the intermediate term seasonal tendency to be moving in the same direction between one time of the year. It may begin at a specific month. It may begin halfway between